Here's a quick look at the market. Quick update here. This is Friday, July 18th, after the market close. So this is the daily chart of the S&P. You can see we made all-time highs again, broke all-time highs today, and then sold off a little bit. This is the channel I'm looking at. If I go to the two-year chart, there's a technique that I use in terms of trend lines. I find my lows, and then what I'll do if I don't have corresponding highs that give me a good upper trend line. I'll just take this lower trend line and I'll just replicate it the same angle. And again, this is logarithmic scale. You always want to use logarithmic, not linear with the charts. But I put this here and I have a high that I attach it to, and then this is the channel I'm now looking at going forward. So it's not ideal because we don't have any, we don't have more than 2 points, but it works for me, and I do this quite often. And the expectation is this will get up, hug this upper line here, and then maybe have a little bit more substantial sell-off. But again, as I've been saying since April, we're in clearly a bull market. We had a V-shaped recovery just like we did with COVID in 2020, making all-time highs. And the average bull market lasts 3 or 4 years. And within the first 12 to 18 months of a new bull market, you have very few corrections, and those corrections are typically very shallow. So, you should be close to 100% invested here. It's gonna, if you don't have time for the stocks and ETFs that I mentioned, the best thing is just to buy your index funds. SPY, QQQ. If you want to get a little bit more leverage, you can do a SSO on the S&P, which is a double leveraged ETF. You can see that was down around 60 something. It's all the way up to 100 now. So nice move there. If you want to get even more aggressive, TQQQ is triple leveraged on the Nasdaq. So you can see the move there that we had 35 up to 86 something. And there's others out there like QQQI. It measures it follows the Nasdaq, but it gives you a 15% dividend. So in addition to this gain, you're also getting a 15% dividend on this ETF, which is great. So a lot of different options there if you're just looking at index funds, which is the easiest thing to do. You basically just buy and hold those for the next 3 years, 4 years, and you should be in good shape until the next bear market. But real quick, just some of the stocks that I've talked about, over the last couple of months. PLTR, that's one of my biggest holdings, keeps making all-time highs, doing really well above the 10 and 20, came close to the 50-day here. Got as low as 128. I bought some more at 134, but just going to hold on to this thing until it breaks the 50. At that point, I'll assess. But as long as it stays above the 50, we're in good shape. Cell H, that's Celsius energy drink. Been talking about this for a long time. Had a big downtrend, and now it's doing a nice uptrend. Got a channel that we've drawn here, a lower trend line with a couple of points. So, basically, if it gets down, for those of you that may not have gotten into this one yet, if it gets down to the 50-day, which is around 41.52, this blue line, that'd be a good buying opportunity. But continues to make higher highs and higher lows. I really like that one a lot. I think this could easily get back up to its former highs around 95. Apple, got this at 200. Been talking about Apple. I think it's longer term. It's not a true market leader, but it's going to give you a good gain. I think once it gets out of this consolidation pattern, it can easily get back up to former highs around 260 or so. SMCI. Oh, Amazon. Let me do Amazon. That one's I got a 200 as well. That's around 226. Doing a little bit better. Again, above all the moving averages. You just ride that as long as it stays above the 50-day here. I think we just hang on to that one. Semiconductors, we got SMCI. I know many of you bought into that one. So we were buying that in the 30s. It's up in the 50s now. So nice move with that. AMD, one of my better holdings here, really made a nice reversal here. And just keeps going higher. Had a nice gap up earlier this week, well above the 10-day moving average. So this is a great stock. Keeps making higher highs and higher lows. AFRM, I like this channel. I've been talking about this in the 2-year chart. See, now this one we've got some good data points here. Your bottom trend line, with a couple of good points, and then we've got a solid upper trend line as well with good points. So we're about right in the middle of that. And as we get closer to that upper trend line, I'll look at looking at selling at that point. But really nice move here, big gainer. And then what else do we got? Root, the insurance company. Matt actually told me about this one, and it's a good stock. So if we look at the 1 year, it actually came down to 115 this week and had a nice gap up today. But I bought some more of this, added to my position. I think longer term, this is a good stock. And then let's see, Oxy. Yeah, I got to Oxy recently. I know Joey had picked up some of that, my nephew Joey. And we almost got stopped out the other day, Joey, but we stayed above the low of 41.65. Came down to 42.05. It was that Wednesday, I guess. So came down to this lower trend line. We were up about 10%, looking for another 5% on that, up to around 48, but we didn't get there. But I suspect that, if we can get back up into this upper channel here, we could get back at around $48. And that's where I would sell. This is more of a swing trade, not a longer term play. And that's about it. Tesla, everybody always used to look at Tesla. I got stopped out of that one and did get back into it, not much, but bought a little bit of this after the Elon Musk Trump feud. Just thinking that that would get resolved, but it really needs to get above 367. This resistance right here. If it gets above that, then it could chase 480. So one to keep on the watch list. One other technique I'll mention is this is ETF. I'll use it as an example. Uranium ETF on uranium. I was buying this a lot. I would buy it when it got down in the 20s, and we had this really clear support line here, this bottom green line. And when it broke through here in April, I got stopped out. But you could just see this thing took off here, and that's a very common thing that happens. Is you'll have a fake breakdown. And then all of a sudden, like everybody gets stopped out because they got their stop loss below the support level. And then all of a sudden the stock or the ETF just takes off. And that's what happened in this case. It doubled. And I could see this as a flag pattern where you got your pull here and your flag, and that thing could go up another 20 points easily. But I missed it. I was busy that week and I wasn't following it, and took off without me. So made some good money on this one in the past, but I missed this big move. But anyway, that's a very common thing that I look for is a fake breakdown or fake breakout. If you have, for example, like a couple with handle pattern, all of a sudden you break above the handle and then just get sold off in the coming weeks. That's a great shorting opportunity because usually those downtrends will continue when you have a fake breakout like that as well. So, and I think that's pretty much most of my holdings, what I wanted to cover. So, Mara, that's another one. I sent out a video this morning on Fox Business. You can look that up if you didn't see it. But the CEO was on from Mara, and this one I like. This was a head and shoulder, inverse head and shoulder pattern that formed, and now it's breaking out, and we've got a nice move here on this one. So, I think longer term this could easily get up to 30. It's around 20 right now, but I could see this getting up another 50% easily, and testing this former high here. Okay, so that's the update. Hope everybody's doing well and have a great weekend. Take care.